Hello everyone, this is Rahul Jakaria from Sharekhan. Welcome back to exciting 3R actionable stock updates. 3R basically means right sector, right quality and right valuation. These are our investment ideas. Today we have an update on Samhi Hotels. Our analyst retains buy on Samhi Hotels with a potential upside of 25% from the current level. The stock is currently trading at attractive valuation of 11 times FY24 and 9 times FY25 EV by EBITDA. It clocked strong performance in Q3 with revenues and EBITDA growing by 40% and 64% year-on-year respectively. A reduction in interest cost helped it clock the PAT for the first time in several quarters. Same-store rooms, 58% of total inventory, have EBITDA margin of 41%. Integration of ACIC portfolio and maturity of new rooms provide a strong scope of an 800 to 1000 bps improvement in margins going ahead. Despite MIDC's termination of lease development of New Mumbai land, the management has maintained its guidance of 5400 rooms from existing 4801 rooms by FY27. Next we cover HDFC Life. Our analyst maintains buy rating on HDFC Life with a price target of Rs 750. The company remains focused on maintaining a balanced product mix across businesses with leadership in new product launches. Management is confident of gradually catching up the growth driven by strong growth in lower ticket segment, focus on Tier 2 and Tier 3 geographies, higher counter share at HDFC Bank and other banca channels, and investment in agency channels. Recently, Finance Minister panel has put forth some of the suggestions before the insurance regulator which could positively impact the entire insurance sector. At the current market price, the stock currently trades at 2.3 times FY25 and 1.9 times FY26 embedded value per share. The stock has underperformed the broader indices in last 12 months.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.